Today is Wednesday, June 1st. Happy National Heimlich Maneuver Day. Please celebrate responsibly. I want to look at two stocks which have had a little change today. They're autos. GM starts it off. Just check this out. Resistance line had a penetration and failure. And now look over here. Breakdown of that line. And again, it's not even lunchtime yet, so things could change. But right now, it looks like this is a breakdown. I want to zoom in a little bit on what's going on here, just because I think it's important to understand the market talking to you here. Now, yes, volume was high here and much lower during March and April. But look what happened here on this breakout day. Now, it closed in the lower half of its range, but it still closed above resistance. And let's put the cursor up here. You can see that volume on that day, pretty huge. I mean, unusually large compared to its recent average. So that is a lot of effort. In Wyckoff terms, there's a rule, one of his rules was effort and result. And here you have an awful lot of effort. This is effort. Volume is effort. A lot of people playing. And the result was barely a breakout, and then the next day, failure. So that's a bearish sign. And here, of course, the rising trend line now broken to the downside. These are the averages above that, the 200-day in green, the 50-day in red. So this is not a good sign for GM. All right, I'm going to check out Ford now. Let's just zoom out a little bit to see what's going on. So still have an overall declining trend here. Look at the averages also falling. All right, coming back in a little bit more. And if we thought that there was poor result for the effort in GM, check out what's going on here in Ford. I mean, this thing actually closed high in the upper half of its range that day. And look at the volume on that thing. So that is definitely a failure in Wyckoff terms, a failure in just general chart reading terms. And again, you draw that line. Now, does the line go there? Doesn't matter. Does it go here? It doesn't matter. Just the point is that you had this triangle-like pattern, or an ascending triangle with a rising bottom. And it doesn't matter where you draw the line. This thing is clearly broken, at least at this stage of the day. Clearly broken after a pretty important failure at the end of April. So it looks like autos are in rough shape. You can draw your own conclusions about the economy from that. But just from the charting perspective, Ford and GM took a pretty big hit today.